Well, hello, and good afternoon, good morning, wherever you are. This is the podcast brought to you by Edgar, Dunn Company. We're in our third season, and the central question is, how can we commercialize and bring the benefits of ever deeper technology to market in a highly regulated environment such as the financial services industry? So I'm delighted to introduce our guests from ACI Worldwide, I should say, Phil and Erich. And I'm joined also by Amine, one of my colleagues here at Edgar Dunn in London. So Erich and Phil, maybe if you just kick off with a little intro about yourselves and your roles at ACI.
Sure. I'm Erich Litch. I'm general manager of payments software. So I'm responsible for all our payment solutions in banking, merchants, and acquirers mostly. Those are our three main customers, but we do central infrastructure projects for countries all over the world. And so we're in a lot of different places regarding payments and money movement.
Phil.
Everyone, I'm Phil Bruno. I'm the Chief Strategy and Growth Officer at ACI.
Great. Well, it's excellent to have you both on the podcast today. And we look forward to talking about some of the challenges that financial institutions have, and particularly around the modernization of their legacy platforms. And I think we're all familiar with traditional banks and the legacy banks trying to play a little bit of a catch up with the fintechs and the challenger neobanks. I think maybe if we could just start off with some of the challenges that we are seeing in the financial services industry, particularly, moving money from A to B, from across borders, across different multiple environments, across different sets of rails, as we always like to say in the payments industry, whether it's ACH or bank transfers, real-time payments, card payments and cross-border payments. Really interesting to hear ACI's point of view on some of the challenges that the financial services industries are experiencing today.
Yes, sure. Maybe
I was going to say, I'll start.
Go ahead.
I think one is just to set the stage as to what is actually out there. So unlike a new entrant, most of our customers have been processing, some of them process trillions of dollars a day or billion transactions a day. So they have a massive amount of transactions and volumes going through their systems. And when you have that kind of, business reliant upon that being basically up 100% of the time and with 100% success rate, you don't really want to touch it very, quickly. And it's not particularly easy to switch off of those kinds of solutions that have been running sometimes for decades, and that just get the job done. And so when you talk about modernizing technology, then you throw in the complexity of the regulatory environment, compliance, and the complicated nature of a lot of the customers that we deal with in terms of their just structure and personnel. It's a fairly daunting task to actually take a major portion of their infrastructure and quote unquote modernize it. So Phil, I'm not sure what you want to add.
Yeah, maybe Erich, agree with you fully on that. Maybe I'll just zoom out a little bit to the industry in that, most banks are not earning their cost of capital today. And payments is critically important. If you add up all the different payments businesses that a bank has, the average bank is 35 to 45% payments. And it's growing at roughly 6 or 7% a year. So that's 2 or 3 times the rate of the economy. So it's an attractive segment and sector for them to invest in and to grow. But they're having all of the difficulties that Erich mentioned in executing, and are really held down by the legacy infrastructure that Erich spoke about. And so it's very difficult for them to create new products, It's very difficult for them to execute and add new services, and they have to move at the pace of their new competitors, which are, fintechs and also large tech firms.
I agree with Erich that it could be a daunting exercise for financial institutions to modernize legacy infrastructure, and it's often very, very, very costly. How does ACI help financial institutions and other clients modernize without the risk of, overhauling the entire infrastructure?
Well, one of the tactics that we use is sort of crawl before you walk before you run kind of approach, where you don't have to take a big bang and replace, everything you do. You can take a piece and modernize that. The other thing is we have a lot of really established proven solutions. And so we can do a hybrid model where we leverage some of the proven technology that we've already had deployed in the market for years and years, and combine that with more modern native cloud offerings, and give you somewhat of a path to full, complete modernization. You don't have to bite off the whole bite all in one bite. You can take it piece by piece and say, hey, listen, I'm going to start with, let's say, I don't know, the Swift. I'm going to do all my Swift wires on a modern native cloud platform. And then I'm going to add, other schemes. Then I'm going to take low value real-time payments and add that on. Then I'm going to take cards, however you want to approach it. But we do have an evolutionary path to full modernization that you can choose to take.
And Erich, I think I mentioned in the kind of the intro about these different rails, and you've alluded to some of them there. Is that the best approach for these banks to look at those as individual rails and start to replace those with a modern solution? Or
it can be an approach. It doesn't have to be. So you can really look at it instead of by a scheme or by rails, to use your term. You could do it by functionality, such that you say, I'm going to tackle high value A-to-A transfers initially, and that includes all of the schemes that you support in high value transfer. And then later, I'm going to take low value, more sort of ACH real time payments, things like that. And then I'll tackle card, maybe later. But you don't have to do it by rail. You can do it by category of capabilities that you want as well. That seems to be the logical approach, as opposed to taking the whole thing all at once.
Yeah, the big bang approach. But I've spoken to banks and financial institutions, and they talk about convergence of payments or transaction processing. Is that something that comes up in some of your discussions with your clients?
Yeah, it comes up so often that we actually built ACI Kinetic to be a universal payment hub, such that it can handle any form of money movement, whether it be high value, low value, or card-based transactions, so that you can be flexible as to how you actually, move the money. We do envision a world where we will get less and less about, the user or trying to decide the method of payment. And instead, you just basically saying, what do you know about the recipient? And we'll give you all the eligible methods that you can to make that payment, and give you options around cost and speed and other attributes of that payment. Yes, convergence is definitely a trend that we see, and one that we're executing upon.
And maybe, Mark, to add to that, I think, with the convergence, there is a lot you can do around and provide services around the transaction. So, for instance, a large financial institution can help its corporates with exposure management and receivables, and understand across payment types, what that exposure is. You could help score receivables with risk versus just aging receivables. Erich mentioned the thinking about payment distribution, as well as managing fraud across payment types at the account level or at the segment level. So there's a lot you can do once you have that kind of orchestration across payment types and rails.
You mentioned speed or transaction speed. As you know, fintechs like Revolut, Wise, or even Stripe, they've set new standards for transaction speed, customer experience, even on the B2B side. What can financial institutions and traditional financial institutions do to adapt, or do they have to adapt based on the pressure from these fintechs?
I think they've adapted pretty well over the last 10 years with the real-time payment infrastructure that's pretty much deployed in most of the major developed countries out there. So you take a country like Indonesia or Malaysia, we actually run the entire real-time payments infrastructure for those countries. So 100% of all real-time payments in those countries are done through ACI software. And the usage has just taken off. Or you take Pix in Brazil, the volume on Pix in Brazil has grown dramatically over the last 5 years and continues to grow at a very, very high rate. And so I think real-time payments is something that the banks have actually done a pretty good job of embracing. And they continue to do that. I think the next phase is going to be particularly hard, let's say in the US, because of the established buying behavior of consumers. You know, in Brazil, they really promoted the Pix usage. Even the merchants really, really promoted the using Pix to buy your goods. We're still not there in the US as far as merchants actually promoting the use of real-time payments at the point of sale. And so, you know, people are attached to the rewards on their cards, and cards is so pervasive in the US that it's going to be a little bit longer for real-time payments to get to those kinds of use cases. But in terms of like remittance, the loading of cards and things like that, real-time payments is actually growing, and the volume is growing very nicely.
But don't you think, you know, I get what you're saying about, you know, consumers from a, you know, it's almost a habit, a cultural thing. They just used to, you know, it's not broken, so therefore I'll just use my card. But on a B2B level, surely real-time payments is a better proposition. It's more lends itself to a B2B environment. Would that be fair to say?
Yeah, definitely. That's where we probably see the most volume in terms of real-time payments in the US. Well, what I was more mentioning is that in other countries, you'll see massive usage of real-time payments by consumers. And so that's the big difference. But in the B2B world, yes, that's why I said it's still growing really nicely in terms of volumes, mostly on the back of B2B or B2C transactions as opposed to C2B. B2C transactions where you're trying to send maybe insurance claim amounts to somebody, and you can use the real-time payment rails to do that. And of course, B2B. You still have the cross-border challenges where you can oftentimes not leverage the real-time payment infrastructure within a country. But yeah, it's a nice format for B2B transactions.
And maybe just to add to that, and I'll stretch an analogy, maybe even too far. We always talk about the rails and the pipes getting built, and particularly in North America, we've done that, and we've built the new systems, but we haven't built the applications. So we've got the pipes and the water to the house, but you need dishwashers and you need sinks and you need showers to really be able to use it. And so we need the applications like a digital invoicing capability in the B2B space. And, you know, we need point of sale, either QR codes or integration into systems that exist already to be able to utilize the payment systems that have been developed. And so I think, you know, in market-driven economies like the US, those things tend to happen a little slower versus in other areas where the government mandates something and mandates an approach. You often get faster adoption, and there's a trade-off with the level of innovation that happens on top of that you get in market economies. So you get a slower liftoff, but often greater innovation down the line.
That's true.
I mean, you mentioned PICs. I mean, I think that's a good example of where it's government-led. The regulator has initiated. You've also seen that in India with UPI. But there are other markets. I think Europe is a good example that they want to, you know, definitely embracing real-time payments and associated with that open banking to allow consumers to give consent to third parties to initiate payments. I mean, just to pick up on Phil's point about the washing machine and the dishwasher and are they a good way of seeing those value add services? Are they the types of services that will be making? I mean, arguably payments, transaction processing could be viewed as quite commoditized, and the danger is that if that's the case, then how do you add value? Is that what you were alluding to?
I think he was alluding to exactly that, which is adding value on top. You take, like you mentioned Revolut, so let's just use them as an example. They're the classic example of layering on a bunch of applications onto plumbing, right? Special use cases for children or teenagers, special use cases for different kinds of businesses. And those are what we might call just application functionality, whether it be special alerts, notifications, rules, setups, all kinds of different things there. And that really is on the top and enabled by open banking. You have like the opposite in the US as an example, where Chase now says they're going to charge PayPal for access to accounts. Yeah. That's the opposite of basically open banking. And it would take the government, like it did in Europe, to kind of come in and say, no, you can't do that. That's not allowed. You have to be open, and it has to be readily accessible as long as the consumer provides consent and does all the right things. You can't do that. But currently you can, and Chase is doing that. So it just goes to show you that, if in Europe, where you just basically open up the whole thing, you can have companies that basically build all those value-added services on top of the rails. But it looks like in the U.S., the ones that built the rails and that basically are behind it and have all the volume are like, no, I want to protect this, and this is mine.
Okay. I mean, I read somewhere that Chase's argument was that they are protecting the data, basically, and they are spending money protecting that data, so they should be getting a return for actually
that's the same argument. That's the same argument that Apple gives for why. Right. We're protecting the end user, the customer, and you can argue with that.
Yeah, and maybe to bring it back to ACI for a minute, we have a whole offering that started many years ago around fraud. But now we call it payments intelligence, and it provides a lot of services well beyond fraud, including decisions around customer experience that can help our clients with providing services to end users well beyond just looking at financial protection.
And Phil, I just want to pick up on that. I think that's, you talk about orchestration, and I think there's a lot of businesses out there that talk about orchestration, payment orchestration. But I think there's a kind of a distinction, I think you're saying, is that actually the data is giving you the intelligence. I mean, you talked about fraud detection and prevention of fraudulent activities. That is using the data, looking at trends, looking at patterns, and using, I don't know whether it's the right terminology, but it's big data, making big decisions on a lot of data, and to be able to say, actually, this looks a bit suspicious, flag it up. Is this differentiating ACI in the marketplace? Because there's quite a few businesses that talk about orchestration, but I'd be interested to get your view.
Yeah, I mean, I think you've looked at, I'll call basic orchestration, which is, what is the best way to send money, let's say, to an end user, whether that's a business or a consumer, right? And Erich mentioned, we can help do that and say, do they need the money immediately? Would you like to send it on real-time payments, which is irrevocable, or should you send it via, ACH if it's a scheduled payment? And I think that's sort of the foundational. But we also can provide a lot of other services that are higher value and higher order. So, for instance, we can, for merchants, help them decide whether a specific consumer is an offer seeker And whether that consumer is a good customer, which it reinforces, the use of an offer, that they're a good customer, or if they're someone that's more transient, or we can, determine and help them look at customers that are return abusers, that buy many goods but return them often, which may not be a great customer as well. So we can help with that intelligence around the transaction, which goes well beyond just moving the money.
And the intelligence goes beyond just preventing bad transactions. It also means streamlining good transactions. And so making sure that you can do auto repairs of wires and based upon rules and AI and not need manual intervention, all kinds of different elements where you can actually help the actual transactions that should go through more seamlessly is also another aspect of payment intelligence.
Does ACI provide these services directly to merchants? Do you guys white label them for certain financial institutions?
We provide our software to merchants, to banks, to acquirers, to non-bank financial service providers. So to a wide range of customers. We provide the software also to other service providers. So acquirers being the largest, right? So we don't actually provide a service directly to their merchants. They use our software to do their acquiring services. So really large acquirers all over the world use our software. We're the leading provider of that capability to process the actual transactions and reach the endpoints that they need to reach. On the merchant side, we also provide our software to payment service providers. Other payment providers out there use our, payment orchestration capabilities on the back end so that they can provide a payment service to the merchants that they sign up for their services. So we provide our software to quite a wide range of customers out there in the world.
And you mentioned the AI, and that's a topic that quite often comes up in discussions, whether it's podcasts or conferences, industry conferences. It seems to be a lot of, I don't want to say hype. That's the wrong phraseology. I mean, there's a lot of talk about AI, and I can see it being used in, we talked about looking at fraudulent, looking at suspicious transactions and using lots of data. And AI is very good at that, making decisions on lots of data points. Are you using AI as part of your, your orchestration solution?
Yes, we have been for many years. So especially in the payments intelligence fraud space, that is needed. But your system needs to be able to learn on its own. You can't rely on manual, rules and algorithms constantly. You've got to actually have the system be able to actually build up patterns and signals and act upon those on its own. And so we've been doing that for quite some time. And we use AI, from an engineering perspective in our coding, from a call center perspective in terms of how we actually, can anticipate customer needs and demands. So we use it pretty much in a lot of different areas. We're looking at agentic AI in terms of, we have thousands and thousands of people all over the world that actually come into our applications and do things like check payment status, approve payments, repair payments, do all kinds of different things. And there's ways in which we can actually help automate a lot of those tasks and activities.
It might be trendy. I'm sorry to interrupt, but I mean, AI is, I mentioned it's being talked about a lot, but you've got a long pedigree of and a history of, using, I think in the old terminology used to be, machine learning or neural networks, big data. Is that what AI really is today? It's just another phraseology, or is it something new?
It is a little bit something new as far as what's being talked about now versus what we've been doing, let's say, for the last 5 to 10 years. In the sense that you're going to be able to use a lot more sort of like natural language to accomplish tasks. So we obviously have, in the many years that we've been doing it, engineers that are injecting this into our systems And it's not as if we can just tell our system, hey, we want you to look for bad behavior, so please prevent these kinds of transactions, and then it just goes, right? It's not taking a natural language input and then having all these business outcomes. So I think as we talk about AI now, I think we're talking a lot more about like actually the simplicity of setting it up and actually having it execute. I don't know, Phil, if you have any different thoughts on that.
No, I think that's exactly right. And, maybe, some things where we're actually seeing real impact is in not just finding the bads, but actually ensuring that we are approving the goods. So in authorizations of transactions and straight through processing, I think those are areas where we're seeing real impact. And as Erich mentioned as well, the reduction and the automation of exceptions processing. Mm-hmm. So, what that does is down the line, it can actually help a bank improve its liquidity. You can help improve the liquidity of the bank's commercial customers as well. So there's real business impacts that are being felt as a result of the improvements with the use of AI.
And one of the hottest topics in payments at the moment is agentic AI. Erich mentioned it. Have you seen any use cases? Have you seen any proliferation? Have you seen any challenges? I mean, in my view, something like dispute management and chargebacks are going to be an issue. And also consumer adoption is going to be key to agentic AI. Do you think it's still a nascent kind of subject, or do you see any potential in agentic AI?
I see a ton of potential in agentic AI. So there are thousands and thousands of people. These financial institutions hire tons of people that do manual tasks and do intervention in transactions, whether it be on the fraud side or the repair side. Or just even the entry, sometimes manual entry of a payment. And so a lot of those tasks can be completely automated and done by an agent, a virtual agent, if you will. And a lot of banks are going that way in terms of, I don't know, you look at the Fargo at Wells Fargo or any of the different characters that they're introducing. But, you should be able to get into that chat window and actually simply say, I want to send money to my mother or whomever, this business. And then they say, well, what do you know about them? And you put it in and they say, I can send it via these different routes and these different costs. What would you like to do? And say, oh, send it this way. And then they authenticate you and then it's off, it's gone. And you never, ever once talk to a person.
So that's to do with customer service, isn't it? And being able to respond to customer needs and expectations. But is there another element that is maybe more about the back office, you
take like office wire repairs right now, right? So in ACI Kinetic, our new platform, we automated a bunch of different rules that you could set up so that you don't have to review and manually correct all kinds of different transactions. You can have and those are rules, so it's not really an AI-based system, but we really make it super easy to manage all kinds of custom rules and things like that. But then, based upon how those rules perform, if you wanted to use AI, you could say, okay, the AI has learned a pattern and basically is suggesting, hey, we could also create this rule and it would streamline your payments a lot more. And actually proactively, reach out to you and say, would you like to impose this rule? Because we think that's going to be a lot more effective. And then immediately you just say, oh, yeah, I would. Or, hey, test that on the next 20,000 transactions and then come back to me with results. You can do a lot of very flexible things.
Amine, did you have anything to add to that?
In my opinion, it's a fascinating subject and we need a separate episode for it.
Just on agentic. Can I maybe change course a little bit and just towards the last 5-10 minutes, just to focus on the future? And I'd like to ask Phil and Erich to sort of maybe, think about 5 years' time. how the financial services industry is going to change as a result of some of these new technologies, as a result of the changing regulatory environment, which is inevitably, the challenge that a lot of your clients have to work within a compliant, keeping customers safe, treating customers fairly, those sort of regulatory environments that you increasingly have to evolve and adapt to. So maybe, I don't know, Phil, maybe start with you. What is your kind of prediction for the next 5 years and how you envisage the future of financial services?
Great question. And I wish I had the perfect crystal ball for this. But I would say that, we are seeing financial institutions increase the pace of modernization that we're going through. And a lot of this is driven not just for, modernization. And we've talked a lot about, the back end and how we process and, pipes and whatnot. But I think what they're really trying to do is modernize the front end and the customer experience and the new products and services that they can offer. And that's really where I think the focus is going to be, and the focus is changing. So, can they also have the flexibility to partner with many of the tech firms and fintechs? So there's, one tech firm that was talking about how they partner with banks and said, look, we have our development cycles and our sprints go for 6 weeks. And if a bank cannot work within 1 and maybe 2 sprints to do the integration setup, we just won't work with them. And so that's the kind of pace that a bank is going to have to work with in the future to be able to not just modernize, but think about go to market and think about how they're going to play in this new tech/financial services ecosystem.
That's interesting. Very interesting.
Yeah. And I would just add that, a lot of times we place a lot of focus and attention on upstarts and new companies that are disrupting the industry. But that's been going on for 25 years. I've been in this business for a long time. And, in early 2000, 99, 2000, there were all kinds of reports of all kinds of disruption from different players, including at that time PayPal. And in the end, the banks have done a very, very good job of holding on to the value they provide in terms of those pipes and the plumbing, and they're all continue to be used. Apple Pay layers onto the existing card infrastructure. It's not revolutionizing that. All the Stripe is leveraging, a lot of the card technology that's out there today. It's just piping into it and providing a value-added service with the APIs and the e-commerce tools and capabilities on top of it. But in the end, those transactions are all going through traditional rails and schemes. And so I think that we overestimate the sort of disruption in the market in terms of financial institutions. You look at E-Trade, what it was going to do to brokerage, and then now all the online brokerages are owned by traditional brokerages. So they're still out there and controlling most of the volume in terms of trading volume. So traditional financial institutions have a way of holding on to the value that they provide. And in the end, they're regulated, they're insured. It's a very, very valuable service that they provide in terms of that capability. And, there will be additional things built on top of it, but I don't think the banks are going anywhere anytime in the near future, or even in the long term. I think they'll be the backbone of almost everything we do. And so what we try to do is provide those banks the better tools and capabilities to compete with the other providers out there and to be able to be more flexible and agile and add new products and services a lot quicker and more seamlessly.
And Amine, any thoughts from your perspective in terms of 5 years' time?
No payment has gone away. That's the one thing we always have to. For every payment that's added, it just adds another payment, right? So cash is still out there, check is still out there. There's all kinds of different payment methods, and they just keep getting added and added and added, and that then increases the importance of having orchestration capabilities and tools and solutions like that. And so my prediction is that in the next 5 years, more payment types will be added. You possibly, I do think, cross-border crypto transfers will start to become a lot more mainstream and valuable, and especially with stablecoin. But all it's going to do is add complexity, and so I don't think it's going to simplify things. It's going to add complexity and create a greater need for payment orchestration.
I'm glad you mentioned stablecoin, because that is, again, it's just adding another level of, another layer, another option, another level of complexity, which I think you guys are in a good position to deal with. Is that fair to say?
That is very fair to say. We basically, anytime any kind of major form of money or value transfer comes on the market, we tend to actually be pretty quick at being a leader in providing that capability. So we did it with real-time payments, and we'll do it with other types of value transfer.
Another question for me is and I was going to say, do you think payment innovation in payments can drive financial inclusion or create a bigger gap when it comes to emerging markets and people who are actually not financially included or unbanked, etc.?
Yeah, you're already seeing that with new products that are out there that are a lot more easily applied for and provide more value as far as the day-to-day lives of people out there in terms of being able to use QR codes for payments and get to your money through either stored value or different creative products. So I think the key question, just politically and kind of like, ethically is at what cost? A lot of those products really have quite high fees and minimums and things like that. And so it begs the question of, yeah, sure, we're providing enhanced access to financial services, but it's very, very regressive in terms of the cost of those kinds of services. So the big question is, can we do anything about that? I don't know, Phil, if you have any thoughts to add to that.
Yeah, I think, particularly with electronic payments and some of the newer applications that are out there and, wallets not tied to the banking account system formally, it democratizes financial services and payments. So, it's first the ability to find a store of value and to transact, as Erich was saying. But then on top of that, you can start to think about how you do micro lending on top of that. And, we're seeing that in, parts of Asia and whatnot. So I do think it will have a positive impact on democratizing payments and, some forms of financial services as well.
Yeah, I think, Phil, you've hit the nail on the head, particularly in the likes of the emerging markets. Africa is a good example where, mobile money has, been, people are more likely to have a smartphone or just a normal function phone to do their banking services than actually have any sort of traditional infrastructure that you and I would be used to, like an ATM or bank branch or a point of sale in a merchant. Guys, conscious of time, I really appreciate your input. It's been fascinating to talk, and I'm going to bring this to a close. And I'd like to thank Erich and Phil as our guests to the Edgar Dunn podcast this session. But thank you very much.
Thank you for having us.
Thanks. It's been great being here.
Yeah.
Thank you.
Thank you very much, guys.